The algorithm that works behind your credit report is dividing your credit report into 5 main categories. You can get a free copy of your credit report both from Equifax and TransUnion if you request them once every 12 months. A good credit is a part and parcel of everybody's life in Canada. Whether you need a credit card, you need a line of credit, you need a loan, you need a mortgage, or even if you have to rent out a house or apartment, you have to show your good credit history in order to secure all these things. And not only that, even certain jobs are required to establish your credit history first, otherwise they will not hire you. Let me tell you an interesting part about the credit in Canada. It doesn't cost you any money or much of an effort to maintain a good credit score. But once you spoil it, it'll cost you thousands of dollars and it'll take you a lot of time before you can recover and bounce back. So always pay extra attention to your credit in a country like Canada where you need credit at every other step of your life. In order to understand the credit, we first have to analyze what is the credit score. A credit score is a 3-digit number that represents how likely a credit bureau thinks you are to pay your bills on time. It can be an important part of building your financial confidence and security. For example, building a good credit score could help you get approved for the loans and larger purchases like a home. You may also be able to access more competitive interest rates. There are 2 main credit bureaus in Canada, Equifax and TransUnion. These are private companies that keep track of how you use your credit. They access public records and information from lenders like banks, collection agencies, and credit card issuers to determine your credit score. About 90% of the banks in Canada use Equifax and TransUnion when they are to extend credit to someone. The credit score ranges anywhere between 300 to 900. The higher your score, the better your credit rating is. What is a good credit score? It depends on scoring model. In Canada, according to Equifax, a good credit score is usually between 660 to 724. If your credit score is between 725 to 759, it is likely to be considered very good. A credit score of 760 and above is generally considered to be an excellent credit score. You can request a copy of your credit report both from Equifax and TransUnion every 12 months free of cost, and this can be done over the phone, email, or online from their website. The algorithm that works behind your credit report is dividing your credit report into 5 main categories. The first category that makes about 35% of your credit report is credit repayment history. The good part of the payment history is that you don't have to pay the entire outstanding amount on your credit, but rather the minimum required payment. As long as you make the minimum payments on time in a month, your credit will not be affected. Now, if you are suffering from a financial crisis and you cannot pay on time, the better idea is to contact the lender and try to make some arrangements with them rather than these late payments get reported on your credit bureau, because if it gets reported on your credit bureau, it stays on the report for at least 7 years, which is not good. So always try to make your payments on time, try to set up the pre-authorized payments, and if you have any difficulties to make the payments, try to contact the lender and try to make some arrangements for the payment so it doesn't affect your credit. The second biggest category that contributes towards 30% of your credit report is the credit utilization ratio. Ideally, 10% of credit utilization ratio is recommended to have a perfect credit score. Now let me explain through an example. The credit utilization ratio is your used credit versus the available credit. Let's take an example. For example, if you have a $1,000 of credit card and you use $900 of credit, your credit to utilization ratio is 90%. The good part about the credit utilization ratio and the algorithm that works behind your credit report is it doesn't look at the dollar value, but instead it pays the attention on the percentage of credit utilization ratio. Let's take another example. Let's say the same credit limit has increased from $1,000 to $10,000 and you still have outstanding balance of $900 on that. Your credit to utilization ratio in this case becomes only 9%, which is perfect. Here is a myth about the credit report that you have to maintain and carry forward certain balance in your credit cards and line of credit in order it gets reported on the credit bureau, which is completely wrong. In order to bring your credit utilization ratio close to 10%, always look for to increase your credit limits. Ideally, contact your lender every 6 to 12 months and look to increase the limit. This way, your credit utilization will stay close to 10%. And the second factor that affects the credit utilization ratio is the number of trade lines. As I said in the beginning, the credit algorithm look at the overall used limit versus overall available limits. So always apply for multiple credit lines. As long as your overall credit utilization ratios stay close to 10%, you will have a perfect credit score. The third biggest factor that makes about 15% of your credit report is the length of your credit history. For example, if you're holding a credit card from last 5 years and today you apply for a new one, your credit history will get reduced to 3 years. So always keep in mind before closing your old trade lines that it is going to affect your overall length of the credit history. But if you do it, it's not a big deal because it only makes about 15% of your credit report. The fourth main factor that makes up your credit report is your public records. This makes about 10% of your credit report. All your collections, bankruptcies gets reported in this section of the credit. Those who have a prior history of bankruptcy or have had collection issues or other derogatory public records may be considered riskier borrowers. The presence of these events may have a significant negative impact on credit scores. So my advice to those who have a public records and credit delinquencies are to pay it as soon as possible and just wait. There's not much that one can do a lot. So this is a game of patience if you have collections and credit delinquencies reported on credit bureau. Pay it as soon as possible and just wait and have some patience. To those who had a collections and bankruptcies reported on their credit bureau, it stays on the report for 7 years. The older these delinquencies are, less likely it will affect your credit. The fifth biggest factor that makes up a credit is the credit inquiries. And when I say credit inquiries, these are hard credit inquiries. It makes about 10% of your credit report. Anytime an individual's credit file is accessed for any reason, the request for the information is logged on to the credit file as inquiry. Inquiries require the consent of the individuals and some may affect the individual's credit score calculations. The only inquiries which may impact a credit score are those related to active credit seeking. So there are two types of credit inquiries. One is called hard inquiries and other one are called soft inquiries. Hard inquiries affect your credit beacon, but it recovers after a certain time. I hope you find today's video useful. If you like the content I create on this channel, please consider subscribing the channel. Thank you so much for watching.